business is to thrive so that it can pay you a decent income and can increase in value so that one day it can be sold, then you, the owner, must take responsibility and manage the financials. Here is a great tool to help you do just that, the budget. This is a typical budget spreadsheet. Right at the top here there's a title with asterisk and years, asterisk, budget. That's where you'll enter the from to years. And then the 12 columns starting in column C here are months 1 through to month 12, where you will enter the starting month and the ending month. And down the left hand column are the descriptions of each of the rows, and as you can see it's broken down into categories of revenue, cost of revenue and operating expenses. But before we get going on the actual budget itself, let's talk about some hints and tips. Your projections are only as good as the information you have. If there is little or no history, there will be lots of guessing. Do not enter cents. This assumes a level of accuracy which is not true. Only dollars to the nearest 5, please. All the numbers in a budget exclude the HST. Each time you redo the expenses, it'll become increasingly more accurate. And finally, when every month you will compare your actual results against the estimates, and so you will become more knowledgeable about your company finances and therefore a better manager of your company financials. So keep those in mind as we walk through using this template. We always start in budgeting with the operating expenses, and the reason for that is twofold. They are easier to estimate than revenue, and when complete it gives us a very good idea on how much revenue we need to bring in. So down here on the left hand column you can see various categories of expenses that you might want to manage. Remember the adage, to manage something we need to be able to measure it. So let's start with the first, the owner's pay, the most important, your personal drawer. Plug in how much you need to receive each month. If you have completed our personal expenses template, then plug in that number. Wages, outsourced costs. This is the cost to hire people to do work for you. Some questions you must ask yourself. Do you have an assistant? If you do, how much are they paid? How much are they paid each month? Do you plan on hiring someone in the next 12 months? When will they start? What will be their monthly pay? Office supplies. This is the Staples or Grand & Toy account. It is for paper, pens, ink cartridges, staples and paper clips. Look at your credit card bills to see if there is a regular amount charged against Staples or Grand & Toy. Try to guess how much each month you will spend at those or your other office supplies supplier. Office rent. If you're renting an office, this is simply the regular monthly payments. If you have a home office, you can charge your business rent relative to the space used. Accounting. If you have a bookkeeper, this is where their costs would go. Typically your accountant cost is once a year, so you'd plug in how much you normally pay her in the appropriate month that you actually pay her. Business insurance. This is the premiums for any business insurance you might have, liability, life, critical illness, and so on and so forth. Debt repayment. This does not include any personal debt. This is a business debt. It might be a business credit card that has a balance that needs to be paid off, or it might be the repayments on a business loan. Don't forget the bank charges and interest. Your regular bank charges plus any overdraft interest you are charged on a regular basis. Remember though that your bank will probably increase their fees at least once over the next 12 months. Internet. This will be your Rogers or Sympatico or equivalent monthly fee for providing access to the internet. You can, if you want included in the computer costs below. Telephone and cell, of course, are the costs for your cell and landlines. And car costs would include things like lease and loan payments, gas, parking, service and repairs. Whereas entertainment is taking people out for lunch, buying them coffee, or taking your favorite client on an all-expenses 3-month visit to the Bahamas. Computer costs. This might include computer leases and or purchases, web-based services such as GoToMeetings, software, IT support costs, to name just a few. Professional development. This would be fees for courses, workshops and seminars. Also include the subscription costs of all the trade magazines and newspapers you might get. Marketing for networking. These are the costs for you to go networking. Include the annual fees and appropriate breakfast lunch costs. Don't be surprised when the answer is larger than you thought it might be. And marketing general would be marketing materials, hiring a writer to write a newsletter, contracting with a company to create that newsletter, rebranding, and all things like that. Whereas marketing website include all the costs associated with your website. A very good cost to manage and monitor. It includes development of the web, hosting the web, supporting the web, maintaining it, and so on and so forth. Consulting, this is where you will enter YPP's program fees, or if you have a coach, the coach fees. And then there's room down here for other stuff. So that's the operating expenses, and as you can see, this template here totals them up for each month, and then totals them up over on the right here by each category. When we've got those, we can now start talking about revenue. Gross revenue is the first thing on the list. Is what you are charging your clients, remember, excluding HST. And like expenses, you may want to manage different categories of revenue. I suggest you don't have too many categories as it becomes unwieldy. In this example, we have subscriptions. This is typically monthly paid revenue from things like membership sites. If you already have a stream of subscription revenue, then project a percentage increase each month over the year. And then there's programs, not unlike subscriptions. These are revenues from people signing up to do programs. Or products. This could be one-time purchases of things like books, swag, and the like. Of all the things you're most likely to have some history on, it is revenue. Use the history to develop reasonable increases over the next 12 months. But there is a cost of achieving that revenue, and it is called cost of revenue. Some examples here. Labor costs. This would be the cost of people making the products above or delivering the programs. Product costs might be the manufacturing of products or the creation of products. And then there's probably another sort of miscellaneous list of things like credit card fees of people who are buying your products. And that leads us to gross profit. The template subtracts the cost of revenue from the gross revenue and gives you a number called gross profit. This is an important number. This is a critical number. Each industry has a benchmark on the ideal gross profit. In some industries it is 50% of gross revenue, and it is critical for those companies to achieve that target. So now you've completed the projections for expenses and revenue and the cost of revenue, and what you get down at the bottom here of the template is the profit or loss for each month. This is the money left over after deducting cost of revenue and operating expenses from gross revenue. If the number is negative, you have made a loss. Positive, it is a profit. If some months are showing a loss, but overall the total column is showing a profit, don't panic too much. It is normal to have swings each month. So that is a typical budget template. Some will be more complex than others, but if this is the first time you are doing a budget, keep it simple. Developing a budget is an iterative process. You will arrive at your first attempt and not like the answer it gives you. You will make changes and adjustments. You will still not like the answers, so back to the drawing board you go. This is not a rushed thing. Take your time. It is better to get it right than get it quick.